Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. KG, all right, let's talk big picture here with these markets. The Dow hit another record. I know we're always so focused on the S&P 500. We did finish mixed yesterday. There are some who say, we could be due for a pullback. What's your thought about the makeup of the price action?
I think when you're kind of looking at the level of resistance for the S&P 500, it does make sense that we did see a little bit of a pullback. That 5750-ish area is going to be key. And we have seen a little bit of a rotation when it came to the market, especially the risk on frothy areas of the market. If you're looking at the uranium trade, the power trade for that matter, or even gold, silver also selling off fairly aggressively. And that actually could drag equities down a little bit, I would say. I think the earnings are still going to be paramount over the next couple of weeks in order to drive the S&P 500 to move higher here. But from a technical standpoint, it does kind of make a little bit of sense that we have some headwinds. Obviously, there's some uncertainty when it comes to the China-U.S. trade talks as well. Some of that intraday action does put a little bit of pressure on the markets just in general. And we did have earnings yesterday, and I would say that they were, for the most part, weren't that great when you're looking at the headline names and some of the commentary that they had around the overall economy or their specific industries. It really did kind of maybe put a little bit of a scare, especially when you're looking at the semiconductor space and the analog space in general when you're looking at devices.
Okay, but still overall, earnings, at least when we looked at them during the day yesterday, were pretty good across the board. But then after that, after the close, we got some the weakness from Netflix, Texas Instruments. Let's talk Netflix first. Even though there was some stress somewhere in their numbers, they're obviously citing Brazil, and it also seems the guidance is worrying investors. What's your take here on Netflix?
Yeah, obviously this Brazil hit that they did take did impact the adjusted earnings per share. That's why we did see that big miss here. The revenue actually did beat the street's expectations, or pretty much met the street's expectations, coming in at $11.5 billion. Street was looking for $11.5 billion. Adjusted earnings per share came in at $5.87. Street was looking for $6.97. They did take an operating loss or a tax loss because of a Brazilian tax dispute for that matter. Now they are in court to try to reverse that, but they did actually take that impairment for this quarter. What was actually very interesting when you're looking at their operating guidance, their operating margin guidance for next quarter, it did come in a little bit light than the street's expectations. Now, in their commentary, they said that this Brazil situation was a one-off type of situation or a scenario, but it does also look like they're probably pricing in some of that impact coming into the next quarter as well, which is why the market is a little bit spooked. When you're looking at the revenue guidance, once again, kind of meeting the street's expectations, you are seeing potentially a little bit of deceleration in certain pockets of the market, and the stock, for the most part, was trading at a key area of resistance. We are now seeing it pull back here at now a former area of support. Let's see if it's going to be able to hold overall. But once again, high expectations. They are seeing, obviously, consumption trends still moving to the upside. But I think the market is getting a little bit concerned that if your operating margins are going to contract here, what's really driving revenues in order to offset that? And right now, we just did not get any of that clarity within the earnings report as well as the conference call.
And I wonder if we would have still gotten the subscriber numbers, if that would have given more solace to Wall Street, since we don't have that visibility anymore. It doesn't seem like every analyst is throw the baby out with the bathwater in terms of reaction, but you are seeing a lot of re-rating on price today. What's your take on that?
Yeah, I mean, you do actually make a really good point. I mean, Netflix is probably one of the only companies in the world that really does have true pricing power in order to leverage that. And not only just here in the United States or the North American segment, which is obviously the most profitable segment within their business portfolio, but they also do have the leverage within the Asia Pacific markets as well as the European market. So if they're able to, and if they need to raise those prices in those areas of the market, that could also kind of drive some of that top line growth, some of that revenue growth, and also kind of bolster margins. So not surprising, once again, very high bar coming into this report, kind of got blindsided by this tax issue here. But are they going to leverage prices? Maybe not so much in the North American segment, but in other segments in order to offset maybe some of the near-term risk. They're also kind of citing the fact that their content spend is also going to come down here a little bit as well. That's something that is a little bit notable. Sometimes the street likes that because it's obviously saving money, but on the other side, is that really going to impact their portfolio of new series and hits and content over the next 6 months, 8 months or so? That's also the cause for concern. So once again, holding support for right now. Let's see how the market actually does react once the equity market opens here.
Okay, let's talk Texas Instruments. That stock is under some pressure in the pre-market as well. What are some of your takeaways off of its latest quarterly results?
It's more the same when you're looking at the earnings announcement for Texas Instruments. They continue to talk about this refresh cycle, not only when it comes to consumer devices, but also in their analog segment just in general. And that is actually driving the majority of their revenue. But when you're looking at the numbers, they had a slight miss when it came to the adjusted earnings per share. That came in at around $1.48. Street was looking for around $1.49. Revenue did actually beat, coming in at $4.74 billion. Street was looking for $4.64 billion. And you did see the industrial market revenue increased by 25% on a year-over-year basis. But when you're looking at their commentary, they're still saying that their customers are kind of holding off right now. Obviously, tariff policy is putting a lot of companies on hold when it comes to purchasing new products. It's also hurting their business as well. They are actually expanding, but if you're looking at their fab utilization rates, they're still relatively low. And once again, their guidance and their commentary around backfilling a lot of these orders or trying to reaccelerate these orders seems like it was a little bit light compared to the street's expectations. So unfortunately, you are seeing the shares down over around 7% right now. And this is a stock that actually could accelerate the selling pressure as the equity market opens. If you do, see maybe some bears really trying to hit this name and really break key areas of support for this name.
And it's already been a tough year for that one, for Texas Instrument. I mean, it's already down year to date by 3%. So you add today's move, it'll end up likely at least being down double digits year to date, or at least 10% based on the futures. All right, KG, let's talk your levels for the S&P 500 today. What are you looking for to the upside and the downside?
To the upside, 6780. To the downside, 6700. We're implying around a 1.13% move either to the upside or downside. We are getting some volatility in the pre-market session as well, so maybe some news is hitting the wire here. But I would just say, be vigilant. I think the trend is still to the upside. The earnings picture is still to the upside for right now, but we are hitting a critical area of support. Do we come back, try to hit or retest 6,600 or so before trying to move higher? That could be the case.
All right, thank you, KG. That is Kevin Green, Senior Markets Correspondent. Appreciate the deep dive there into some of the results and the levels to look for on the S&P 500.